Okay, we're back here to cover a few power stocks. One couple that we played today, and one of the best ones was Bank of America. I'm going to show you a larger view on Bank of America going back pre-crisis 2007, the top. Okay, I don't remember if any of you knew 2007, 2008, 2009, but I was on Wall Street, and trust me, it was just wild. Okay, it was just a crazy time, and we still survived, and we still made money. And so it's just the way it is. So saying all that, let's take a look at Bank of America from that level. I constructed this chart very simply, put the fibs up there, and see that I don't need to explain. And this is where we are. We had a huge settlement with Bank of America. That in itself is not the reason why the market is propelling bank stocks. Part of the reason is that it removes a huge overhang over the whole industry as each of these banks settle with the Justice Department, pay the fines, and get this monkey off their backs. Hopefully, this allows these banks to work with the capital requirements that are in place and ease back and remove the uncertainty of what the government might claw back from them. Hopefully that allows them to ease back on some of the lending standards and fuel the next stage of the housing recovery. Now that's the textbook uh, um, belief. Whether it happens or not, we have to see. But if capital requirements are eased a bit, now that they don't have to worry about paying another 20 billion, 17 billion to the government, obviously that takes off. That allows them to be a little bit more aggressive in their lending. Hopefully, not to the levels that they were back in the crazy period, the real estate boom period, pre 2000, the early 2000s. Um, so that's the take, and hopefully, and apparently that's going to help them with their profits, obviously, as their lending business grows. Now, that's one reason. The second reason is very simply is interest rates are going to rise, and higher interest rates, despite the common myth, is actually or misunderstood myth, I should say, is actually very good for banks. It allows them to capitalize on the spreads and make more money. Low interest rates, as we are seeing right now, don't help the banks at all. They keep a lot of the money in reserves, and it certainly doesn't do anything because they can't really lend it out because of the strict lending standards, and they don't have the spread available to them to lend at a much higher rate. That's how banks make money, right? They lend you at 15% while they're borrowing, while their cost of that loan is 5% or less, and so they keep the spread in between. So, saying all that, this is the chart on Bank of America. So where do I think it's going? This is obviously a more longer term picture. And at this point, I believe the banks have gained traction. And if you look at it, I believe this is the $18 to $20 stock over not too distant future. We might even see that in by September, and at least we can see 18. I think it gets there fast. This is a very structurally pattern chart. If you look at it, if you want to look at it at a very optimistic level, you can always draw the 50% fib retracement. That is at $28. I think most analysts have this stock pegged at $40. I don't really track Bank of America, so that's what I saw. But purely from a standpoint of where, as a trader, is looking at, I am looking at the $20 level. Okay, because all the lines match. You just drew this in front of you. This is where it matched. Now, with the options in sub $1 and 40 cents and 50 cents, I think this is a fantastic play. So keep your risk levels to whatever your risk levels are. But I like the fact that it had it had a this is a weekly chart. It had a weekly breakout. Let me zoom in. Look at that. Weekly breakout. Yes, it's on top of the Bollinger right now, but I believe that we have a fair shot of moving up towards the $20 level. Okay, if we break above that, I mean, again, it's pattern symmetry at play. Bank of America. Okay, you have So now we have this stage here. Okay, so if once we hit this 20, we we might consolidate back a little bit towards this 16 level. You got to buy it there, and then it moves up hard, because this was the deceleration, the fast waterfall decline, and I can assure you, based on my experience, that this pattern will be, this pattern will be completed. So if that happens, again, it's not a $10 mover every day like Netflix, but the reality is a lot of money can be made. You see this move here? Well, guess what? This will be, that's when it hit 4. So let's say, where we are right now. So I believe that we get to at least this level. Okay? So draw this. There you go. So Bank of America this year could very well, I don't know, maybe this year, early part of next year, I don't know, very well could be a double from the levels we're looking at, or slightly higher. So that's Bank of America. Let's take a quick look at Goldman Sachs, and let's take a look at the daily chart. I've shown Goldman before. Oh wow, I gotta go weekly. Let's take a look at the weekly chart to see what's going on. The weekly chart is just, it's it is fantastic. So what do we see here? Let me get this lines drawn here. Once it breaks over 180, okay, that level, then we are basically looking at up here. Now this is not going to happen in a straight line, obviously, but look what happened here. See this pattern? That's this pattern that's being played out, and in between here was the consolidation phase. See that? So I'm just showing you a different way of looking at things, without getting too technical. So this channel 222, it gets there. Whether it gets there this year or whether it gets there early part of next year, I'm not sure, but I think it gets there this year. I think banks are going to accelerate in the fourth quarter. Bank lending standards and everything included will be eased. I think housing is going to pick up a little bit more, but overall, I think banks are in pretty good shape. Now, that's the bullish view. What's the bearish view? The bearish view would be that this thing comes down to 150. That's the lower Bollinger, but again, the 34 and the 50 have to basically cross down 150, and then it bounces up to 175 again. Very possible scenario, and of course it breaks here. Then we are obviously looking at 186, around that level. And if all hell breaks loose, then you have 114, and that's a real Mayan landing. I'm using that word, sparingly in my video cast. So that's Armageddon right there, right? If it goes to 114, that means things are really going, something's going very, very wrong. While I'm at it, let me show MasterCard. I was looking at it today. I haven't played this lately. Looking at MasterCard on a weekly basis. I've shown MasterCard and played it so many times. People know me from StockTwits and the MasterCard trades, which were very profitable. So here's what I see on MasterCard. Let me get my drawing tool here. You got this, you got to buy here, and you got to buy here. So now it's moving up. The 34 and the 50 have to start to crawl up, so MasterCard can get back to 82. If it breaks around 78, it's going to get up here. This channel on MasterCard is the channel that's worth playing. 73 to 82. Options are very cheap on MasterCard. You have to be patient with them, and you just sit there. That's what my experience has been. So if it breaks out over, let me show you another pattern here. Let me create a parallel line. Okay, if it breaks out, so if you want to look at it this way, these are tracks, right? It follows. You're looking at 87, which would be an all-time high, but I think short term we get to about $82, and that could happen over the next 30 days, if not less, barring any major catastrophe in the market. So that's MasterCard. So we covered 3, and those are the 3 that I'd be trading. Visa I don't trade as much. I find MasterCard to be cheaper and more profitable to trade, both the common as well as the options. So there you go. Rest of the charts I'm going to leave it out on static, so please review them. We re-engage tomorrow. Thank you for being there today, and we had a very profitable day in many fronts. And let's sit back. The techs are just resting, Uh,